I'm Joshua Birdsall,
And I'm Leon Driscoll.
and we're doing the basics of credit. Alright, so credit essentials. So, credit is an agreement to obtain money, goods, or services now in exchange for a promise to pay in the future. A creditor is a person who lends money or provides credit, and your credit is going to be based on the creditor's confidence within you. A debtor is a person that borrows the money or uses the credit, and interest is a fee for borrowing money from a creditor. So your interest rate is a percentage of the total amount borrowed, and the interest rate depends on the length of time of the loan and the amount of money the loan is.
Okay, who uses credit? The first type of credit is consumer credit. And consumer credit is the type of credit used by people for personal reasons, such as buying groceries or getting gas. The other type of credit is commercial credit. This is the type of credit businesses use for big purchases or buying buildings. Also, the government uses credit to pay for many services that they provide for the citizens.
Alright, so the advantages of credit. So, one, credit is very convenient. That's because you just carry around a credit card, which is just a piece of plastic, and you bring that everywhere you want to go, and you don't have to have a large amount of cash on you. A credit rating. So, what your credit rating is a measure of a person's ability and willingness to pay debts on time. So, the better the credit rating you have will depend on if you pay your bills at the end of the month on time. Another advantage is you can use credit, obviously, instead of cash, and you don't have to carry around the money, as previously stated, and you get to keep track of your transactions at the end of the month when you get a bill.
Alright, the disadvantages of credit. First, there's a credit limit, which is a point where you cannot charge any more on your card. And the factors to consider before using credit: do you have the cash you need for the down payment? Do you want to use savings instead? Can you afford the item? And could you use credit in a better way?
How to establish good credit. So normally when someone with little or no credit history is applying for a loan, a cosigner is often needed. This is basically a person with a good credit history who can contractually vouch for the person applying for the loan and will enter to legally binding contract agreeing to pay for the loan in case if the main applicant can no longer pay for it. So the best way to approach paying for your credit is to pay it at the end of the month and pay everything that you can. So try to pay all of it, and that'll give you better credit. What a credit report is it contains the vital information about your credit history, including loans and credit card accounts and balances. And your credit score is a statistical summary of the information contained in your credit report. So its purpose is just to summarize your credit worthiness in a simple 3-digit number, which can be very quickly accessed by lenders.
Alright, types of credit. There's sources of credit, and loans can be short-term or long-term. And then there's also charge accounts, which are credit provided by a store or company for customers to buy its particular product. And there are multi-purpose, single-purpose, and travel and entertainment credit cards.
Alright, so credit cards. So like charge accounts that can be used in many different places, credit cards can just be used anywhere. Credit card companies earn money from the interest when you buy something, and charge accounts are issued by the banks. So credit cards are a buy now pay later thing. So you'll say you go into a restaurant, you'll buy your dinner with your credit card, and you'll have to pay it off at the end of the month. So there's 3 types of credit cards. One is single purpose cards, which is you can buy goods and services only at the business that issued the card. So you pay part of the amount or the full amount that you paid for the item after 30 days, and interest is charged on the unpaid balance. So the next is multi-purpose cards. So banks issue them, and these cards can be used in many different stores and are paid off like single-purpose cards. So that means that they're paid after 30 days, and if the interest is charged on the unpaid balance. And the last is travel and entertainment cards. So you must pay the full amount due on the items each month, and they're accepted worldwide for many uses and purposes, and they have an annual fee.
Banks and financial institutions. There are loans, which is when you borrow money from the bank and you eventually pay it back with interest. There are single payment loans, which is when the debtor pays back this loan in one payment, including the interest. There's installment loans, which are like student loans, car loans, or home improvement loans, and they're repaid loans in regular payments over a period of time. The debtor makes equal monthly payments. And then there are mortgage loans, which are written for a very long time. They're usually about 15 to 30 years, and they're used to purchase real estate, such as a home, and it's a monthly payment. And then there's collateral, which is something of value that the bank can take away if the borrower doesn't make the regular payments.
All right, so consumer finance companies, what they do is they give loans to people who might not be able to get credit anywhere else, and there's risk involved because these people may not be able to pay back the loan.
All right, other types of loans. There are payday advance services, which offer short-term loans until payday, but they charge high fees and interest. And pawn shop loans, which they hold something of value in place for you to pay back their loan, and if you don't pay back your loan, they keep the item.